This webinar gives advice on adding payroll costs into foreCASH. When adding payroll costs, you may want to split them by cost centre or department. To see how to add a cost centre or department, please refer to the separate video on adding overheads. By default, foreCASH forecasts include 4 lines for wages and salaries. The first 2 records relate to cost of sales, while the third and fourth relate to salaries forming part of overheads. foreCASH has 2 fixed cost of sale payroll records, one for weekly paid wages and one for monthly paid salaries. For overheads payroll records, you can add as many additional entries as you wish. 2 buttons are shown on the right hand side. For adding new records. One is used for adding a weekly or fortnightly wages record, while the second, which I'll use in a moment, adds monthly, quarterly or annual salaries schedules. Before adding new records, you can amend the default settings for weekly wages record or monthly payroll records, such as the typical rates of deductions, whether you're paying by cheque or backs, and the payment day during the period. Okay, let's go back and add a monthly payroll record. I'm first prompted to add a description. I'll use marketing salaries. And put this under the promotions department. I can enter an annualized salary total. This excludes employers' national insurance. Or I can enter a monthly figure, say here 11,000 per month. At the moment, the monthly salary is showing as a fixed amount, but if I wish I can switch to a variable amount. So if the salaries from July are expected to increase to 13,000, I can edit the July figure, and by pressing F2 I can copy that amount all the way down to the later months. In most cases salaries are paid monthly. If I wish to, I could set up a quarterly or perhaps a salary amount, an annual, which might relate to a bonus. If a bonus year ends in June, I could also specify that there's then a couple of month delay while the bonus is calculated before it's actually paid. But let's come back to the simple case, the monthly salary for now. Payroll can be a significant cash flow for many businesses, and it may not be paid out on the last day of the month, so I can specify when during the month it will be paid. Here I'm going to pick the last Thursday of the month. Using recent payroll reports, I know that in fact the PAYE typical deduction rate is 20%, and for employees' national insurance, let's say it's 8%. These amounts are deducted from the base pay and deferred in the cash flow until the 19th of the following month. The employer's national insurance, which I'm going to set here to 11%, is added to the total cost reported in the profit and loss. I'm not going to use it here, but I can also specify pension contributions, both amounts deducted from the employee's base pay and also any employer's costs. if the employees in this department have any variable element of pay which is related to the sales or margin the business is achieving, I can also add a percentage for that. But in this case I'll leave that as 0. Okay, I'll save that. Next we'll look at a weekly payroll cost, and rather than adding a new one, I'm just going to edit the existing record that we already have. The screen's similar to the monthly salary record. Please note that the amounts entered here are the weekly amount, so the monthly amount will be 4 to 5 times higher than the figure we're seeing here. Payments go out on a Tuesday. We're happy that it's weekly, but we could similarly set up a fortnightly payment. There are rarely an exact number of weeks in a month, so for the purposes of the profit and loss, foreCASH will allow for the way that the weeks are split across the end of the months and accrue amounts accordingly. By default, amounts are accrued on a 7-day working week, but if I wish to, I can change the basis to a Monday to Friday working week only, and although payments for these weekly salaries are made on a Tuesday, that actually relates to the week that ends the previous Friday. So if I say there's a 4-day delay between the end of the working week, this will also be allowed for in terms of the charge to profit and loss and any accruals in the balance sheet. If I wish to, I can specify the accrual that was brought forward at the start of the forecast. If your business doesn't accrue for weekly paid wages, then I can uncheck this box, and foreCASH will then operate on effectively a cash basis, so the full charge will be expensed on the day that the net pay is made. So in effect this means you'll either get exactly 4 weeks charge or exactly 5 weeks charge, but never something in between. Okay, we'll just save that. I've covered payroll in overheads, but let's now look at the monthly labour cost in cost of sales. While we have a base cost here of £1,000 per month, you'll notice we have a bright red box towards the top here, noting that there are committed minimum costs recorded on this schedule, but the activity levels may drive the costs recorded in the forecast higher. To understand what that means, we need to go back and actually look at the sales forecast. You'll see here I have a single product item set up, and if I go into the detail of the costs on this item, it has a percentage labour cost for both weekly and monthly payroll, which are driven by the sales of this item. We have no sales for this item in April and May. There's no labour cost associated with that product therefore, and all of the labour in our forecast, 1080 seen up near the top here, is unallocated. In June meanwhile, we do have some sales of £2,000, and so therefore there is some labour cost associated specifically with this product. It's £300 of cost of sales, all relating to labour shown on this product, leaving £780 of unallocated labour. Finally, if we look in July with very high sales, total labour cost of sales associated with the product this month is £15,000, which exceeds the base labour costs that we were forecasting. This then means we've got no unallocated labour and all the labour, and in fact additional labour, is being forecast to be used on this product. What I'll do now is actually look at a forecast profit and loss report. You can see on the third line of numbers here figures that were discussed a moment ago, and if I actually push this report out into Excel, we can again see how the labour costs has been split between the unallocated general cost of sales salaries and product specific amounts. If we want to go into even more detail about what foreCASH is assuming and look at the breakdown of the cost of sales salaries, you can actually see the base salary of £1,000 for budgeting, the employer's national insurance related to that, even though we hadn't budgeted any weekly labour costs. The product was set up to include a weekly labour line, so you can see here that foreCASH has said I need to use some weekly labour, but because I have unutilised labour overall, I'm going to borrow that from the monthly labour. We're going to assume that if we've got unutilised resource, we'll use that before we go outside to bring in additional workforce. Meanwhile, in the following month, where the labour requirement was so high that we're actually using up the entire budgeted monthly labour, foreCASH is then assuming that we need to bring in some overtime on the monthly labour costs, and because that's been used up in full, it's also assuming there's also some weekly overtime that's needed to complete the work on these items. The reason that foreCASH is building in this additional cost is, as a cash focused product, it doesn't want to underestimate the cost of your business and the cash flows that you'll be facing. I hope this recording has been useful to you. If you have any further questions on setting up payroll costs in foreCASH, please contact support@forecash.co.uk. Thank you for watching.